Hello traders, I hope you have a profitable week. In this video we are going to break down two setups that we shared on Premium channel last week. I am sure that you are going to learn a lot from this video, so stay concentrated because we are going to share new insights that will help you implement them on your trading. Both setups are based on lower time frame. We have here the Australian dollar Japanese yen chart. If we look the naked chart, we see a strong impulse and price that is pulling back. Our goal is to find out best zones with high probability of success where the pullback may end. To help us to define that, we are going to use several tools. The first is session volume profile of previous day. This is very helpful tool, especially the point of control of that day. Often POC serves as a resistance or support. We also looking for other high volume nodes. Next step is to define the supply zones. We have a rally, base, drop, supply zone on the top. To shift lower with a drop, base, drop, supply zone. To continue with the same supply more lower. And the last supply that is the same with the first one, a rally, base, drop supply zone. Now that we finished with drawing the zones, we are going to choose the high probability ones. We see that point of control of previous day correlate with the second supply zone and 0.618 Fibonacci level. There we are going to look for potential sell opportunity. Price reached this level, and our goal is to wait for candle rejection to find out if the sellers are still strong in this zone and will push the price lower. There are two ways to trade these zones, with a limit order and market order. Both have pros and cons. The limit order offers us a better risk-reward ratio trade because it executes automatically. The cons is that we don't have candle confirmations. The market price order has lower risk-reward than limit order, but on the other hand we can avoid more losing trades if we wait for candle confirmation before executing the trade. Price created a long-legged doji candle. The confirmation for this type of pattern is next candle closure below the wick of the doji, and furthermore, below the body of green candle. In this case, price didn't made any candle confirmation and continued in upside direction towards the next supply zone that correlate with 0.786 Fibonacci level. Make sure to like and subscribe. This encourages us to make more helpful videos. There we saw a clear sell pressure, several wicks, one after another, inside the supply zone. We have a doji candle on the top and a candle confirmation. The red candle closed below the lower wick. The stop loss on this setup can be at last supply or just above the wick of the candle, depends how much you are going to risk. To define the target, we use the volume profile again and put it at the point of control of previous day. Price consolidated for a while and reached the target. Next setup was Euro Japanese yen. 15 minutes time frame. We are doing the same process as we did on previous setup. We have highlighted the session volume profile of previous day and we are going to analyze it. The point of control of this profile is not fresh and is not important as in previous setup. We noticed a minus development zone. Indicates the direction of capital flow. Very little time is traded there. This is the area of breakouts or breakdowns. It serves as a support or resistance when price revisit it in the future. We see clearly this zone that has no volume on it. Now we are going to use trend-based Fibonacci extension in order to find AB equals CD patterns. If you want to learn more about our strategy and be part of Premium channel, we offer a mentorship program. Check the link on the description to find more information. Price has completed a regular, a BCD pattern. We highlighted the D point, but when we look on the left, we don't see any significant volume that will encourage a buy trade on that level. The minus development level correlate with an alternate 1.27 a B equals CD pattern. Below the minus development we have a high volume node that we are going to consider when we place a stop loss. We expected a drop at D prime level, and then we are going to consider there a buy opportunity in upside direction. For the final target we have chosen the second high volume node on the right of the chart. Both volume nodes are important and we should be aware of. Price dropped at minus development level as we expected and bounced in upside direction sharply. When you have such strong move, it's recommended to move stop loss to break even and a partial closure of the position. This setup reached 70% of potential target precisely at first high volume node. And then price dropped sharply in downside direction. These high volume nodes contains a lot of sell orders that are triggered automatically and the sell-off in the market. I hope you have enjoyed the video and thanks once again for supporting our channel. See you on the next video.